Hi, and thanks for joining us today. I'm George Pino, the CEO of Commercial Brokers International, and I have a great guest today that I think you're going to find this topic very interesting and very pertinent. And I don't think I've ever thought that I would ever say this about insurance. So, this is Mark Fuchs. He's with M&R Insurance, and he's a broker extraordinaire, does all kinds of commercial insurance from liability to property insurance. So I had a couple of quick questions, and actually, if you don't mind, let's just jump right into it.
Please.
There's been a lot of news lately, especially in California, about some insurance carriers that are pulling out of the area. So, what does that mean in general? And then we can maybe delve into some things that some clients can do to help protect their insurance.
No, that's it's a fact. Carriers are pulling out. We actually lost 3 admitted carriers at the beginning of the month. And just to one thing with that, some carriers decide that they're not going to write new policies.
Okay.
Right? So they'll keep the ones that they currently have. They won't.
So that won't be as big of an impact.
Right. So they won't cancel them, but then a few of the carriers just are out. So with the ones that are out, we have already received about 40 non-renewal letters for the fall.
Okay.
So what it's done right now in California is it's shrunk the market.
Sure. Now, quick question. There's obviously the basic laws of supply and demand.
Yes.
The demand's not going anywhere, but obviously the supply is shrinking down when you have less people, operating in the business. It kind of creates an oligopoly that they can kind of set their prices. But I know a lot of our people that are watching are going to ask, well, is this just California based? I mean, is it because of earthquakes or what? Or what's kind of going on here?
Okay, it's not just California. The biggest things is that the cost of reconstruction and more importantly, the cost of reinsurance has gone through the roof. Quick little stat. Since between 2020 and 2022, the insurance companies suffered $275 billion in losses due to fires, earthquakes, hurricanes, tornadoes, flooding. So what happens is that the insurance companies don't take on all the risk. What they do is they go to reinsurance to cover upwards up to 50% of it. The problem is a lot of those rates have gone up quite significantly, but the carriers have to apply with the state insurance commission or the California Department of Insurance or whatever state you're in to raise rates. And they say it'll take them about 6 months to review. If you get it in 12 months, you're ahead of the game. So what's happened is they have not been able to pass on those costs, even though a lot of your viewers are going to say well, wait a minute, my policy's gone up 25, 30, 40% in the last 3 years. That's just based on them increasing the coverage A, just for the cost of reconstruction.
So there's even more increases.
There's more increases coming.
Okay. Sounds like it, because it sounds like they're probably going to come back to the market once they get approval for their new rates, which is also then going to push everybody else to match those rates. So it sounds like we're in for a little bit of a
it's not going down. It's not going down. It's not going down. And probably what you're seeing right now is that it's a battle between the insurance companies and the Department of Insurance. Right? That's why you're seeing a lot of them all at once pull out.
Sure.
Because it's going to force the California Department of Insurance or your state's insurance department to negotiate.
Approve the increases, or at least work with them, as opposed to we'll talk to you in 6 months.
Exactly. I mean, but here's the other thing too: is a lot of people you have an admitted carrier, which has chosen to file paperwork and operate a business in the state, and then you have non-admitted carriers. A lot of people look at non-admitted carriers as less, but that's not necessarily the case. They still have the ability to write in the state, and sometimes, believe it or not, we've actually had policies written for slightly cheaper than some of the admitted carriers. Just people have a little bit of a, stigma about a non-admitted carrier, thinking do they have the same ratings? Are they as qualified? And the thing is, bottom line, the ratings are you look at the ratings. Yeah. You want the A-rated carriers, whether they're non-admitted or admitted. And you do have options, but again, the field is narrowing at this present time.
Okay. Now, back in the day, we always used to hear, especially after the Northridge earthquake, California Fair Plan.
Yes.
Is that something that's still around or an option? And why don't people go to that? I know the answer.
Well,
but
okay. Well, yes and yes. So we are going to the Fair Plan, and Fair Plan is what's considered the insurer of last resort, and every state has one. Fair Plan, just to let you know, whether it's homes or commercial properties, 160,000 in 2019 policies, and as of 21, they were up to 268,000, and we've been writing more in the last 2 years.
Wow.
Your problem with Fair Plan is even though they finally increased the limits, their limit's $3 million
Okay.
per
And
property address.
And for commercial real estate, that's pretty much, and for a lot of homes even.
And a lot of homes.
But
Yes.
commercial real estate, that's pretty much every property in Los Angeles.
Right, and here's the other thing too. Fair Plan just covers the building.
Yeah.
Because if you have to go to Fair Plan, then you have to go out and get a separate liability policy on top of it.
Mm-hmm. Okay.
So it's a twofold. So you're gonna have to get two.
How about
policies.
working with some umbrella coverage?
Well, you can
Is
do
that an option?
well, yeah, but you have the umbrella is excess, so that's
Okay.
over and above your
So
normal.
over excess.
So a lot of times, like if you have a
Okay.
standalone GL, what happens is they won't go as high of limits. So
Mhm.
then you have to bring in the umbrella excess
Okay.
to cover yourself.
Okay, so it's not like you can just get an umbrella policy for all the properties. It's more about a excess over what
Right,
you
because
currently have
umbrella
on each
is
individual.
always above what you currently
Okay.
have. Yes.
All right. Now, what are some, and I think this is going to be a really key point for our clients here and the viewership is, what are some key points and what can someone do ahead of time if they know that the insurance policy is coming due to mitigate the increases in prices? I mean, even if we're going to have one, they can probably do something to, one, make sure that they're renewed,
Right.
and two, try and keep
Well,
those increases to a minimum.
First and foremost, never let your policy lapse. Okay? Because
I made that mistake once on a car insurance, and actually it wasn't my mistake. The ACH apparently didn't go through
Right.
that the day it was due.
Uh-huh.
Went through the next day. They canceled my policy and then tried to double the cost.
yes, because you've technically lapsed for non-payment,
Yeah.
which is not what you want to have or lapse for coverage. But what you want to do is be proactive. Don't wait. And you'll get your renewal usually 30 days out, right?
Okay.
So as soon as you get your renewal, start addressing it.
Mhm.
Reach out to your agent. Find out what's happening. Get the quote. See what the costs are. Have you done updates to the buildings, right?
Mhm.
So that's another thing what we're seeing with applies a little bit more to apartment buildings, but any kind of commercial building is now on the application. We used to be able to just kind of give them a date.
Mhm.
Say, oh yeah, we did the plumbing in 2015, we did the roof in 2012. Well, now they want proof. They want to see
Okay.
the receipts. There's no more you can just say you did it. And now, especially if you're a new customer to a company, they will inspect.
Yeah.
And you have 30 days to address whatever their findings are. Not necessarily that you have to fix it, but you have to have addressed it, whether you contracted with an electrician, a plumber, a roofer. But now they are going to require proof.
Okay. Now, it's interesting because I know in the past with my properties, we've always, you had that list down, you wrote down, yes, the electrical's done X, Y, Z or whatever.
Right.
What happens if, let's say I'm buying a property and now I bought a property,
Right.
5 years down the road, and I don't have
You don't have the receipts.
receipts.
Right.
And they just replaced the roof right before I bought it. How can I prove to them? How can I show them goods, marketing materials, or do they want receipts specifically? What can I do in that case?
Here's what you want to do. If you're a purchaser of a property,
Mm-hmm.
in your due diligence, first find out when all these updates were done and ask them for copies of the receipts. And if they don't have the copies, get the name of the contractor who did the work.
Yeah.
So you can reach out to them so you
Okay.
can get proof.
How about just showing permits? For a lot of the capital expenditures, you're going to have permits on the city that have been filed and recorded.
Yes.
Can they pull that instead of receipts?
They can.
Okay.
Anything that proves
Okay.
that you did the work.
Or someone?
Right, someone did, not you
Someone did.
necessarily, yes. You can save a few shekels, yes, if you're doing
Yeah.
the work yourself, but, are you a licensed contractor? Probably not. But yes, anything that can prove that the updates were done.
Mm-hmm. Okay.
Yes, you definitely need proof now. So what's happened is the insurance companies have taken losses.
Okay.
And, it was an industry that, that kind of took you for your word.
Sure.
And especially here, like in California, like if you're in an apartment building, the odds are it's 60, 70, 80 years old.
Mm-hmm.
And that's another thing that's happening right now is that every year your building gets a year older. And what's happening is a lot of these big companies don't want to write a building that's over 40 years old, 50 years old. So that's, those are some of the things we're running into right now is age of the building.
Okay.
Because the older buildings typically have more losses.
Okay. Now, is that primarily because of the systems itself, or do you think it's because I know some older buildings? I mean, there are buildings within the U.S., not just in L.A.
Oh, yeah,
that are hundreds of years old.
Correct.
And they're still in. They're still functional and usable.
Yes.
But sometimes maybe.
Well,
I know a few years ago, like Zinsco
Right.
breakers,
Right.
in
We
the
did
60s and 50s.
Right, we did those. So
so,
the
yeah.
Zinsco, they're like, there's three that they won't even write, and
Yep.
they will make you replace them.
Okay.
And if you have not replaced an electrical panel on your building, don't be surprised at the expense. It's going to be a little sticker shock, and especially, I mean, you might have a 10-unit building. It might cost you $30,000-$40,000 to replace this. And what you have is that if you're like a small, like mom and pop owner, that's like their source of revenue, like is to let them know, educate your clients
Yeah.
as to what's happening.
Well, it sounds like it's a lot of it, from what you're saying, is just education, but also being on top of everything.
Absolutely.
Don't let it go. Don't let it slip. If you get a notice, make sure you address it. Be responsive, and then they'll work with you as well.
They
to
will.
some extent,
Right.
as long as you're addressing the issues and working on it, then you should be able to work something with the insurance company, unless they pulled out of the market, of course.
Right. Well, that's true. I mean, work
Yeah.
with them, contact them ahead of time. Don't wait till the last minute, because if you wait till the last minute, one, good chances you're going to, maybe go past your expiration date,
Okay.
right? Or two, you're going to get into a situation where you don't have options.
Okay.
And you're going to have to take the coverage. And what you have to remember is you have any kind of loan on a building, some of the banks have their own requirements, not just what you're willing to do, right? And then also for like your clients that you're doing leases for, right?
I was actually just going to ask about that. What should clients do in preparation to make sure that they don't make some timelines? Because I know, like in commercial leasing, if you don't get your liability insurance in place, they don't give you the keys to the
Correct.
property.
Correct.
So, and I've seen many times where the person getting the insurance gave the wrong amounts. They're trying to save a dime.
Right.
And they end up getting a lower amount than what the actual lease requires.
Right.
And
And they still won't give you the keys.
and they still won't be the keys
Right.
at that point. You're
Yes.
absolutely right. So,
So-
what are some of the things that someone should be aware of as far as a tenant, but also if you're looking to purchase a property, like in the insurance side? Let's break that up a little bit. and then
Okay, so
go from
tenant.
there.
Okay, when you're a tenant and you as the broker, what you need to bring to the table is understanding all aspects of what their lease, they have to satisfy. So the insurance is get a copy of what their insurance requirements are ahead of time. It's a paragraph or a page in the lease, and then reach out to a professional like myself and just say like, hey, I have a client. They're commercial brokers, right? Here's their thing. They've got this many employees. They're getting an office space. What do they need to do? And a lot of times what's happening now is the landlords of these bigger buildings, they've increased a lot of their coverage limits in the lease requirements because all these things are written by attorneys. So it's the old CYA, right? So,
Sure.
And what they're trying to do is they're increasing the coverages that your tenants have to have because they're trying to make the tenant's policy cover everything
Everything that they
possible before it comes back
Yeah.
to the building. So like right now, like they're requiring people to have business personal property coverage, right? For your desk, your chairs, your computers, because they don't want to have a fire, have 100 units or offices burned down, and they have to cover everybody's personal
Sure.
property. A lot of them are requiring you to have workers' comp if you have employees, hired and non.
Other than the state.
Yeah, the state, yes. Well, the state is a little bit more now too, but it's like, call me, and what I do is I like look at it and look at the requirements, and I'll call the landlord or the agent and say, hey, I'm looking at your requirements. This is their business. Like, they don't need this coverage. Sometimes we can negotiate
Yep.
out
Actually,
some of those requirements.
Just stole my quick pro
Oh.
broker tip for everybody out there. when you're working with the agent, make sure that when you're negotiating the lease, that page is already there, and you've got a couple weeks while you're negotiating that lease before you sign it and move in. So what I would do is immediately get the page that has all the insurance requirements on it, send it to their insurance agent, or have them send it to their insurance agent broker, and let them say, you know what, this is in line, yes, we can do this, or maybe this is a little bit high, push back on it. They'll also give you some secondary input or third-party input on should we negotiate those insurance rates.
That's true.
So,
and then your owners, right? So like a lot of time, like you got the strip mall, right? So like think about that. All these things you see on every corner, everywhere. Now the biggest thing is that what you don't think about is your tenant mix can be a big, issue. So things like if you have a restaurant in there, they want to know what are their operation hours? Do they have a liquor license? In their kitchen, do they have all the approved hoods and fans and things of that area? If you have any kind of entertainment, like I had they had a banquet facility.
Sure.
Just for Friday and Saturday nights. But they allowed people to go as late as 2:00 in the morning. I had an underwriter that was like, no. They didn't want it because of the hours of operation. Sure. And especially if you have a tenant in there that serves alcohol, right? Like a restaurant.
Absolutely.
They need to have strict policies in place for serving, making sure, because that liability goes with them. If you send a patron out the door that's intoxicated, that can come back to the restaurant. And then if they're coverage, then they'll come after you as the building owner.
What about, and I'll close it with this because we're running a little bit shorter on time, but what about businesses that, some other businesses, like I would assume in California we're probably running into things like cannabis, or maybe some issues with that. Are there traditionally also, and do the insurance companies have issues with, let's say, businesses that typically cater to or may cause not vagrants, but a little bit more people coming around, such as smoke shops,
right,
check cashing places, things like that.
And again, what they're looking at is that mix. What kind, one location, right?
Yep.
The neighborhood. And here's one that a lot of people don't realize, and it's getting more and more into underwriting that you don't see, but crime score. As they look at the crime score in the area.
Okay.
So we had one that we thought, oh, no big deal, it's here. It was a warehouse space. And one of the reasons when I called the underwriter, he's like, oh, the crime score there was horrible. I'm like, the crime score? He said, yeah, we look at the crime score. So is it a business? Tobacco shops, liquor stores, cannabis, not so much. I mean, I think that gets a bad rep sometimes. But again, controlled substance, what have you. But if you have a liquor store that's in there and they're open until midnight, who's going to a liquor store at midnight?
Yeah, exactly.
Right?
Yeah.
Who's going to buy cigarettes at midnight? Right.
Okay. Well, those are all great tips, and I'm going to wrap it up with that, but I'm also going to leave you with another pro tip that ties into that. Make sure that if you are in a multi-tenant retail building or any kind of commercial building, you're the owner, that the lease should state that if their use causes an increase in any expenses such as insurance, then the tenant would be responsible for it. Make sure you get a good agent that can negotiate that for you and put that in your lease for you. So make sure you have that, and make sure that you're following up with it if something like that does happen. So thank you again, Mark, for being here. I think this is some great, valuable information. Don't forget to like, and more importantly, to subscribe if you did like it. And look forward to seeing you guys here the next time. And place your comments. We'll make sure we get back to them.